Hi, Team AAA. It's Melissa Ashcroft here, the owner of the AAA Financial Group and host of the Property, Ownership, Wealth and Everything Related, also known as the P.O.W.E.R podcast, where we chat about everything money, taking charge of your finances in this modern world, and all about power and how to create your own. Be sure to follow our socials on AAA Financial Group on Instagram and visit our website at AAAmortgages.com.au to read more about us and book in an appointment. So today, I'm very excited to have a broker on our podcast. Who'd have thought? I have Joseph Daoud here, who is the founder and director of It's Simple Finance. Welcome.
Thank you so much for having me on, Melissa.
Thank you for coming. It's very nice to have you.
I'm just so excited, particularly because everyone thinks that brokers are in competition with each other.
Correct.
We're not.
No.
There is so much work out there, and there's so many individuals that we need to assist, take care of, and put into a better financial position.
Yeah.
That I can't even explain. Like it's not dog eat dog for us. It is how can we help each other. So
exactly.
I'm so appreciative that you brought me on today.
Oh, well, thank you. Like when I've researched you and invited you to come on, that was one of the reasons, because you are a team player. You do like to educate. And while there are some brokers I don't particularly like, I am all about inclusion and, working as an industry to, have us seen in the public as more professional, and to have, as a trusted advisor is what we are, but the entry level is not that easy. But building up a business is not that easy as well. Mm-hmm. So I want to encourage more people to try and do that.
Yep.
But let's talk about you for a little bit more.
I've never done that before.
And about Joseph, let me tell you, he settles $15 to $20 million a month in property loans. He works with everybody from investors and home buyers to commercial real estate buyers and businesses. And just as I touched on, he educates Australians on the home loan options through accessible content through his Home Loan University YouTube series and his podcast, which has way more followers than mine, but that's why we're all here to share. So, Joseph, I want to hear a little bit more about your career journey. I read your bio that you have a degree in economics majoring in maths.
Correct.
Now, we all know you don't need to be good with numbers to be a broker, so tell me the journey, please.
No, so it's a degree, my degree is in commerce with the two majors, so it's economics and mathematics.
Okay.
And similar to many things in my life, as I continue to progress and level up, I discovered that it would be best if I tapped into the finance industry, or an industry that was dominated by money.
So tell me a bit more. You started as a personal trainer.
I started as a personal trainer in 2010. And the reason for this is I went on a massive weight loss journey.
Yep.
And I went on a boys' trip to Europe. We planned this. It was 7 guys, hostels, everything on the like. And I was laying down one night, and all I thought to myself was, I'm losing money. Clients are leaving because I'm not in Australia training them at the moment. I'm not able to push the business. I'm so worried about what this means for me in the long run.
Yeah.
So I was kind of laying down and I go, you know what? How am I going to build my future? How am I going to make sure I'm never in this position again? I'm going to go back to uni.
Right.
I went back to uni and I was like, what were you good at school? It's such a basic question.
Yeah.
But because I was a mature age student, I could just start applying for different degrees and see who would accept me. And I found a Bachelor of Commerce in Economics with a major in Mathematics. Well, things that I enjoyed at school.
Yeah.
Went to university, got my degree with my double majors. And by the time I had finished, I was 26, 27 years old. Now, I think this was about 8 years ago. 8 years ago, 26, 27 was very late for an entry-level position at a bank.
Yeah.
They didn't even want to look at you.
Yeah.
And I was applying for, the likes of Westpac, St. George, CBA, but there was one interview that stood out to me, and it was Macquarie Bank.
Yeah.
I was so excited because if you work at Macquarie, it's like, oh, you work at Macquarie? Okay, yep. It just puts you on a different level.
Yeah.
So when I got the job with Macquarie, I was so excited. However, and I am going to make you laugh now, I didn't know what the job was for.
Okay.
It said senior lending specialist, or was it senior banking specialist? I'm like, you know what?
Cool title.
We'll learn. So get to the office on Monday and quickly learn that I'm part of the home loan team.
Okay.
And quickly had to learn all the ins and outs of the mortgage market.
Yeah.
And Macquarie's policy.
Right.
Now I can tell you firsthand, I should have been fired 14 times in my first month for making mistakes. However, they taught me a very important lesson in life, and that is it's not wins and losses, it's wins and learnings.
Okay.
And every time I would make a mistake, manager would pull me aside, whoa, what will you do differently next time? And because of that, it allowed me to elevate myself. You know, it's baptism by fire. And by month 3, I think I had submitted $20 million worth of applications.
Wow.
I think by my 6th month, I had settled $40 million in a single month. And that's when I was like, okay, I'm enjoying this. This is fun. Got offered an opportunity at a private lender.
Yep.
And I started looking at how that works. And I was like, this is very interesting. And then I started to look at brokers and I started to see, you know, what the potential was for myself.
Yeah.
So left Macquarie Bank, worked in the family business like yourself for a year. And then after we had finished a certain project, I was like, I'm gonna do it. I'm gonna take the leap and open my own brokerage and focus on doing exactly what people used to say to me when I was on the phone at Macquarie.
Yeah.
Thank you for making it simple. Thank you for making it simple. Thank you for making it simple. Because the individuals that are coming to you and I, they're not in mortgages every day.
No.
They don't understand why an LVR change or can affect an interest rate. They don't understand what lender's mortgage insurance is and why it might be applicable if their deposit is smaller.
Yes, yeah.
So taking the time and effort to be able to break that down will always assist the client and it will always assist your business because it allows you to be a person of integrity. It might take a little bit longer, but you have the individual staying with you for a longer period of time as well.
Exactly. You've broken it down, right? And whether they're entry level to the market or they've been borrowing for 30 years, the easier we can make our clients' lives, the better. So we try and make it simple. So I guess that's where the name It's Simple Finance has come from.
Correct.
Very good. And so, you know, you've got some really impressive numbers there. You're CBD based. What is it that drives you every day? So what is the wake up? Is it, you tell me.
Do better if possible, and that's always possible.
Always do better. Nice.
It's a mantra I have lived by since 2020.
Yeah.
There was a certain individual in 1788 when he founded his brand. You know, it's a luxury brand, but that was the mantra: do better if possible, and that is always possible. And you know, one day you might have a fantastic day. You might be able to settle 3 mil, or you might, you know, settle 4 different loans in one day.
Yeah.
What can we do better? How can we assist more individuals? How can we ensure that whoever comes into contact with us is wealthier afterwards?
Yeah.
And living by that mantra allows me to constantly push myself.
Really good. Yeah, I love that. Do better, because you always can do better, right?
There's always some small thing that you might have missed, or, you know, I'm a human. I miss things all the time. Just having that little tweak can elevate you.
Yeah, exactly.
So I think having that and reminding myself every single morning, we could do better.
Yep.
Push ourselves further.
Push further, yeah.
It just allows us.
Incrementally doing better each time gives you a better business. And, you know, you've been a business owner through your personal training. You've worked as an employee of a major bank. You've worked at a smaller place, which I'm assuming is a private lender because they're not big companies.
No.
And you've worked it out. And, like, for me, I think as well, we do this day in, day out. I've been doing it for a decade. And so what motivates you? It's just that drive, and that I love that, do better, because I don't actually have a phrase for it, but I've just got like this innate drive.
Yeah.
It just keeps going.
Yeah.
The car does not stop. I'm worried about what it will do if we do stop, but that's not for today. That's for, we'll have this chat in the future and see where we go.
I just got to add quickly, I did have a break for about 1 hour and I was like, I need to do something. Okay.
I get it. Sometimes it's like, as soon as you do need that downtime though. You do need that time to, just take a deep breath, because sometimes that's when the best creative thoughts come in about that problem solving for that client, that you just like, how do we help, or how do we do it? And sometimes you just need that moment. So let's then transfer into business and what our job is, and I'm really curious to find out what niches you're seeing in the market at the moment.
So over the last 7 months, we have settled 123 different properties.
Wow.
Four of them were first home buyers.
Wow, okay, good stats. I'm going to write this down.
No, you're more than welcome to. So what we have discovered in the market is we're not getting a lot of the younger, I've just broken into the market, or, I've just started my career. I've been saving money as I was working part-time. We're not getting that as much. We're not getting the individuals making $85,000 to $90,000 a year purchasing their first property.
Yeah.
What we are getting are the individuals who have purchased property in the past.
Yeah.
They've built up some equity and they're self-employed.
Yeah.
And they are the ones that are coming to us for us to assist them with their finances. Now, you might hear big numbers and think to yourself, oh, wow, they've done 123 properties.
Yeah.
I see the work behind it. None of those loans were easier because somebody was self-employed. If anything, they're harder.
Yeah.
But the biggest thing we have noticed is with the first home guarantee and all these government schemes, a lot of people haven't been able to access it the way that they could back in 2021 and 2022. Back in those years, 40%, 50% of my applications were first home buyers.
Yeah, exactly. And rates were a lot different as well, right?
Correct.
But also, and that kind of leads into this next thing, which we've kind of discussed prior to this podcast, because, what do you think about the recent election with their promises and how that's going to affect homeowners? What is the government? Well, what do you think what do you think that they're saying? And then tell me what your opinion is on that.
I want to say whoever Anthony Albanese or Labor government's campaign manager is, did the best job in the world. And if they're ever looking for a marketing job, I'm more than happy to hire them.
Okay, you heard it here first.
They demonised the Liberals' policies, and they also over-glorified their own policies. Now, there were two schemes that were introduced. Well, an extension of the scheme. Let me get back into that. So there was the Help to Buy scheme, which is if you have a 2% deposit, the government will help you with an extra 30% for an established dwelling, or 40% for a new dwelling. Yeah. I'm not the biggest fan of this scheme because that means the government would have ownership within my home. However, it is a fantastic scheme for those who are single mothers, for those who are from low socioeconomic households.
Who need the assistance.
Yeah. There is red tape around it, such as you can't own more than one property if you're using this scheme. You can't be using the equity within the property to purchase another investment property without buying the government out. So there's so many parameters around blocking individuals from growing a property portfolio. However, I see it daily. Woolworths managers not being able to get into the property market and live close to where they work. So if I'm a Woolworths manager and I've saved $20,000, for example, and I want to live near Padstow, the median house price in Padstow is well over $1 million. My salary can potentially cover the mortgage repayments and my partner's salary. However, I might not be able to get into the market. So what the Help to Buy scheme is, it allows those individuals to live closer to where they work. So I'm a big fan of that one.
Agreed.
I do not like the extension of the first home guarantee because
First of all, it's confusing. for those people who don't know,
Yep.
you know, and yeah, keep going, please.
Sorry, I'm going to go on one of my rants.
No, that's fine.
You've got me on social media.
Yes.
Yeah, there's so many rants on there. I'm sorry, guys. I'm just passionate. I love my job. I love what I do.
Yeah. Well, we want to help, right? And we want to see more people get into the market. Your statistics of 4 in 123 being first home owners, I mean, I've seen that across the board. It's really hard unless you've got wealthy parents or parents who are prepared to, you know, the fifth largest bank in Australia is the bank of mum and dad.
Yeah.
So I'm really keen because we want to help people get into the market, because my belief is that we're going to use debt to make money. We're going to use debt to buy a home, because over time we believe the value of that home will go up, and that will create equity for us.
Correct.
So,
With the first home guarantee was initially introduced by the Liberal government back in, I think it was the back end of 2020. So this was during COVID, I think was when it was originally released. It was known as the FHLDS.
yeah.
And what it was, a scheme for individuals or couples, both had to be Australian citizens,
Yep.
both had to be, earning, I think there was the price caps, the limit caps, everything. However, it was a test to see if we provide these 5% deposit loans and if we guarantee the other 15%,
Yeah.
are they risky?
Yeah.
Or are they going to be feasible for the banks?
Yep.
Are we going to have a lot of repossessions, or is this going to be a good idea to get people into their homes earlier? And what we discovered, because of the income limits and the price caps on the properties,
Yeah.
people were succeeding.
Yeah.
There wasn't a high rate of repossessions or arrears or anything, because
Yeah.
people were living within their means.
Yes.
Interest rates were 2%, however. What happened as the interest rates increased, so did the repayments. And the individual who's earning $125,000, or the couple that's earning $200,000, weren't able to afford the median house in Sydney. They weren't able to afford in Melbourne. A lot of them were relocating to Perth. Now, what Labor has done, or what they're planning to do, is they increased the price caps, and they ran a fantastic campaign. If you live in Sydney, you could buy a $1.5 million property with just a 5% deposit. And you've seen it time and time again, just a 5% deposit, just a 5% deposit. Nobody highlighted two things: the income you need to afford a mortgage that high, and the stamp duty implications. Stamp duty.
I saw your post on this.
Stamp duty is a state tax.
Yeah.
So if you are purchasing over $950,000 in New South Wales, no stamp duty concession applies. So the stamp duty on a $1.5 million property in New South Wales is $67,000. So you might have a 5% deposit.
Yep.
$75K.
Yeah.
Do you have the money for the stamp duty, the $67,000?
Yeah.
And I've seen people comment, say, oh, but, they've made it more affordable. There's no affordability in that.
No.
3% of households in Australia have access to that kind of liquidity and that kind of money. So it was just such an amazing thing to see, such a strong campaign, and then no one be able to afford to actually get into it. And this is the funniest part about it. I've had people in my comment section say, just buy a house worth $800,000 instead. But that scheme already existed. And the problem is people didn't know about it.
Exactly.
And that's where I think Liberal failed. And I also think that they failed on their own schemes and campaigning, because I'm going to get destroyed for this, but their schemes weren't explained effectively.
No. I didn't understand them.
So they had two key schemes from memory. One was, we are going to allow first home buyers to access their superannuation and use up to $50,000 for a house deposit. And then we're also going to allow first home buyers to negative gear their first property for the first 5 years. And everyone went up in arms, how dare you, all this kind of stuff.
Yeah.
They're trying to increase affordability. First home buyers are getting priced out of the market because investors are able to borrow more. But what if you make the playing field level? What if a first home buyer could claim a tax deduction on their first property? all of a sudden their borrowing capacity goes from 400,000 maybe up to 600 or 700,000.
Yeah.
On top of that, accessing superannuation for your first deposit. What's an SMSF?
A self-managed super fund.
Correct. And what do most people use the SMSF for?
Buying property.
Correct. So what is the difference between using an SMSF to buy a property that will grow in value eventually versus using your deposit to purchase using your superannuation to purchase a property that you will live in?
Yeah.
So I don't think that these two schemes were explained effectively enough because yet again, I've seen individuals saying they wanted us to use our super to buy a property. Yeah, do you guys know the wealthiest individuals in Australia all use their superannuation to purchase property?
Yeah.
Because property is tangible. It is a finite resource and it grows in value over time through every single lull, through every single interest rate peak, all of it. We've seen property grow. Even the last couple of years, we have seen property skyrocket and the interest rates were 6%.
Exactly.
Why? It's a good country.
Yeah.
People want to live here.
Yeah.
And genuinely, we see a lot of people migrating here because it's a better way of life.
Yeah.
And it's not just people from third world countries. There are a lot of Canadians here.
Yeah.
There's a lot of Americans here now.
Yeah.
A lot of Brits. A lot of the Irish go to Coogee. You know, God bless them all. I love them. But we have, we have a great way of life here in Australia. Everyone wants to live here. Property is always going to go up in value.
Exactly.
No matter what we think, no matter how many arguments.
Which statistic you read, it's always that. And what people don't know as well is that in the second decade of ownership is when it really does move forward, up the, First decade, not so much, but over time, since, property in Australia, the second decade is when it sees its biggest jump. I'll send you the table.
I would love to see that. Yeah,
because that's what I tell everyone, because I'm like, you want to see it as a potential long-term investment, know that it's going to take that second decade, so after 10 years. But if you're able to buy something and improve it, then that, exponentially increases as well.
Yeah.
So, look, that was all very interesting, and I know our listeners are going to be asking more questions about that, which is what we always want them to do, because that's what this whole podcast is about. It's about free information and free credit advice so that people feel like there's some way to make sense of things without having to not understand it. And so I say free, but I honestly mean I'm here to help, and I know that's how you are as well. Like, we reply on social media channels all the time, whether it goes somewhere or not from a business perspective. It's the informative nature of what we do.
But that's what allows people to know if you're genuine.
Yeah, true.
If it's a $5,000 fee just to get into a room to access someone, that individual doesn't genuinely want to help you. They might value their time, but I think to myself, just the way that I was brought up, by my mother and father, if you can get in a room and help someone, help them.
Why not?
Yeah. I had an individual call me last night, and he was telling me, about all his dreams. And I said to him, I go, if you've got an NAB relationship manager, NAB is my favourite bank right now, all across Australia.
Okay, good to know.
We're
using them a fair bit too.
Their first year self-employed policy is fantastic.
Yeah.
I said, if you've got an NAB relationship manager, have your meeting with them first.
Yeah.
And if they give you a great deal, I'm going to tell you if they give you a great deal.
Yeah.
Because when you are genuine and you work like that, people see it.
Yeah. And that will show in your second decade of business ownership where your profits exponentially go up.
Oh, let's hope.
So look, I think that's been really positive. My podcasts aren't very long, but I think the short and sweet nature of them is also, important for people, because we don't need to labour on about things. I think they got our key points today. So I asked some fire questions at the end.
Go ahead.
All right, and they're not about work, or not all of them about work. Okay, favourite drink and an event or night out?
Old fashioned.
Old fashioned, okay. Party holiday or relaxed holiday?
Relaxed holiday.
One task at a time or multiple at once?
One task at a time.
That's where we're different. 9 to 5 or 24/7?
24/7.
Same. Best way to unwind? You don't?
Meditation.
Oh, meditation. Oh, very good.
Meditation, basketball, my 2 golden retrievers.
Oh, cute. I love golden retrievers. Okay, coffee or tea?
Coffee.
Morning person or night owl?
Morning person.
Go to lunch order in the office?
Fishbowl, poke.
Mine too.
Yours too. The
Fish
salmon
bowl.
and
Chicken OG.
Oh, your chicken
Extra
OG.
protein.
That is a good one though.
Protein's important. And how do you reward yourself after a successful deal or month in business? What do you do?
Keep going.
Go with the mantra.
Yeah, just go with do better if possible, and
Do
that's
better.
always possible.
Well, I suggest you find some ways to celebrate the wins because it's tough enough.
I'm just trying to think.
I don't do anything.
No, I'm just.
Like, what I do, I'll go out
You just
for
broke
drinks
my
with
brain.
the team. I'm sorry. I'll go out for lunch with the team, or I'll.
I think. No, there is something I do.
Okay.
My favourite retail store is Caliber.
Okay, very good.
And they have very comfortable sweaters.
Okay.
And I will go buy myself 3 or 4 of them.
Nice.
And that is very successful month.
Very good.
Yeah. And
Well, Joseph, there's no doubt you must have thousands of those Caliber jumpers in your wardrobe.
We're trying to decrease a little bit.
Well, thank you again for coming.
No,
It's
thank you
been
so
a
much
pleasure
for
to get to know you, and I really appreciate your opinions. And we'll have to have you on again.
I'm more than happy to.
Okay, well, thanks again.
See you guys.
Bye.